Hi, a couple of weeks back, we launched something that has changed the way top traders on Tradetron are managing their risks and optimizing their portfolios. In today's video, I'll talk about the PNL management or portfolio management feature that we've launched on Tradetron. And I will give you some insights about what top traders are doing with this feature so that you too can optimize and improve your portfolios that you create on Tradetron. Before going into the portfolio management, let's do a quick recap of how exactly are you supposed to build your own portfolios. So in order to go to this page, just go to the portfolio management section in the deployed page, and out here you'll be able to see all the different portfolios. Now you can see all the different portfolios and you can add or remove a portfolio. And in this portfolio are basically comprised of all of the deployments that you have on Tradetron. So I can see all of the different deployments that I have added, and these deployments now can basically be clubbed into any one portfolio. Now for that portfolio, I can add the days of the week on which certain conditions are going to be checked. Now, which are these conditions? This is basically the target, stop loss, and the trailing stop loss. So the target and stop loss are basically numbers that you're supposed to add, negative numbers. So you add positive numbers out here, which you want your overall portfolio to be based off for the target and stop loss. So let's say that top creates basically defining at what point or defining a trailing mechanism, but for all the strategies in your portfolio. Now in here there are multiple inputs: the TSL activate at, TSL set, TSL increase, and profit increment by. Now what happens with these inputs? So let's assume with numbers, I select my activate at as let's say 5,000, TSL set at as let's say 2,000, and increase TSL by 1 and increase profit by as 1. Now what is happening is that once 5,000 rupees of overall PNL is happening in all my deployments, the TSL will be activated. And when the TSL is activated, the TSL will be set at this point that you see as the TSL set at point. So when my 5,000 rupees of profit is achieved, my TSL is now going to be set at 2,000 rupees, which I've mentioned out here. Now this, whenever from 5,000 the profit increases by let's say 1 rupee, my TSL will also increase by 1 rupee. So for example, from 5,000 my profit went to 5,010 rupees, which means there was a 10 rupee increment. What will happen is that the TSL will now go from 2,000 to 2,010 rupees. So most top creators or top traders will basically play around with the different ratios out here. So instead of a 1:1, they would keep something like a 1:1.1 or 1:1.2, or let's say 2:1, or let's say 1:3, and so on. With these different ratios, they are able to make sure that after a certain threshold of profit is achieved, they are able to either exit at a no profit, no loss, or they are able to cover up their costs when running this particular portfolio. Another way in which these top traders are basically managing risk is that they are knowing that every large loss that we had is basically a small loss that was not exited on time. So for that, what traders do is that they select all the different strategies for that specific day. So they will have different portfolios for Monday, Tuesday, and Wednesday, Thursday, Friday, and all of these portfolios have all the different strategies that they have deployed specifically for that particular day. Now they can add a stop loss or only a stop loss for that particular overall day level portfolio. Now what is happening is that if I know that my max risk appetite is 10,000 rupees for a day, what I will do is that after 10,000 rupees, because my stop loss for my overall portfolio will be triggered, it is basically going to exit all the strategies that I have deployed on my account. So this way I can be stress free and know that at any point, even if the market does the worst situation, I will not lose more than 10,000 as I have set my day level stop loss at 10,000 and so on. Another awesome way in which creators or marketplace creators and the top creators of Tradetron are using this portfolio management feature is that they are bundling up different strategies. So a lot of creators have certain strategies which cater to directional movements, certain strategies cater to non-directional movements, and so on. So what they do is that they make a bundle of all of these strategies, and that bundle is then offered as one cohesive unit. So when you deploy any strategy, you get to select your target and stop stop loss for that particular bundle, and you are able to add your own strategies as well to that particular portfolio, or you can choose to not have your own strategies in that portfolio. So this way, marketplace strategies and your self-created strategies can be combined into a portfolio in order to have certain risk management checks on that particular portfolio. With that, you can also choose to combine different exchanges. So for example, I am running strategies on crude and gold after 3:30, but before 3:30 I'm running strategies on, let's say, Nifty futures and options. I can choose to add all of these strategies of different exchanges into one portfolio so that I have risk management across an entire portfolio that I have created. Now, it is important to note at this point that when we are creating a risk management across different exchanges, as long as the denominated currency is the same, you can do it. But if the currency changes, then you are supposed to not use the portfolio PNL for that particular thing. So let me give you an example. Let's say if we are using, like on Tradetron, we are coming up with NASDAQ and US based future and option strategies. So if you're creating a US based future and option strategy and you're combining it with an Indian NSE based future and option strategy, both of the currency denominations are different, so you cannot have a dollar based denominated strategy with a rupee based denominated strategy. So that portfolio should not be added together. Another way in which these portfolios are created are that while a portfolio is added, you can also choose to exit and reactivate individual strategies within that portfolio. So for example, I have a portfolio with 3 strategies. One is giving a 1,000 rupee profit, the other is giving a 500 loss, and I have the third strategy which is giving a 3,000 rupee profit. And for these 3 strategies, my overall portfolio target is 5,000 rupees. Now, what I can do is, if I want, I can choose to exit or manually exit the strategy which was giving a 1,000 rupee profit and reactivate it. When I reactivate this particular strategy, what is going to happen is that my portfolio level PNL calculation will not take into account the 1,000 rupees of profit that I've already booked in the previous run counter of my first strategy. It will just take into account the current running status of that particular strategy. So whenever I want, let's say if I feel that one strategy is basically going to trigger exits for all the different strategies in my portfolio, I can choose to exit and reactivate that particular strategy only using manual discretion, and that will not affect the entire portfolio and it will continue to run as is. So with automatic, I can also have manual control over this particular portfolio that I'm creating. So whether you are a new trader or you're managing dozens of algos, this portfolio PNL gives you crazy amount of control over all these deployments that you have. Similar to a hedge fund, you're creating your own hedge fund in essence, and this is basically changing the game for retail traders. It's already done it for top traders, and now it's your turn to use such awesome, powerful tools in order to improve your trading with Tradetron. Thank you everyone. Until the next video, goodbye.